All right, so we are on chapter one. That may seem just a little bit confusing because we just left off on chapter 16. Okay, next four chapters, the last four chapters of Principles of Accounting 2, we will be doing chapters 1, 2, 4, and 5. Okay, these are all managerial, so they're a little bit different. So don't get confused thinking, oh, Miss Solano's starting over with chapter 1 from Principles 1. I am not. I'm starting with chapter 1 of the managerial textbook. Okay. So, and it won't change in my accounting lab. Everything's going to be the same in there. They just separate it out as two books. Okay. So we are going to go through the first video will be over learning objective 1.1 and 1.2. And then the only other video we'll have will cover learning objective 3, 4, and 5. Okay. So let's talk a little bit about what managerial accounting means and kind of understand how it's used. Okay. So up to this point, we have talked about a service company in Principles 1. That's what we started off with, a service type business. Then we moved into a merchandising type business. Now we're moving into what we call a manufacturing type business. And a manufacturing is going to be like Ford Motor Company making cars. I use Frito-Lay a lot because they take raw products and they make chips. Okay. So they take something like a raw product and they make something out of it. Okay. I have a couple of YouTube videos I'm going to let you watch also. So, but let's kind of review way back in chapter 1 of Principles 1. We looked at these two exact definitions. We talked about managerial accounting and we talked about financial accounting. Financial accounting deals more, think of the term external. When we think of managerial, we are thinking internal. Okay. So we still have these rules of GAAP that we have to follow for external purposes, but when we're in managerial type accountings, we're looking more internal. There are different ways to do things in managerial accounting that still don't violate GAAP. So, for instance, my husband used to be an inventory control manager at a distribution center. They didn't make stuff. They're kind of like Walmart. They bought and they sold stuff. That's it. Okay. So, but they were a distribution center. His job was to count inventory. He had a crew that worked underneath him every single day. They would rope off 2 or 3 aisles. They'd count everything on that aisle, then go look at the records, make sure the records reflected exactly what was on that aisle. There was always some differences. Sometimes they would lose inventory, but it didn't really matter. There's not like a gap rule on how to count inventory. You just count it. Okay. And the way you go about it can be very different. And then you still get to the exact same number for external purposes. Okay. So we kind of have a little chart here. This is really nice. We talk about the primary users of financial accounting, investors, creditors, government authorities. Managerial accounting, the primary users are internal. The company's managers and employees are using that information. Okay, what's the purpose of the information? Well, for financial, I'm not going to read all these, but for financial, helps investors and creditors make investment decisions. Okay. For managerial, helps managers, employees plan, direct, and control the operations. Okay. So I'm not going to read all that. That would be a really good review for y'all to go back. You do have access to these PowerPoints in Canvas. Okay. So let's kind of talk about the manager's role in the organizations. Managers, they occur at all different parts of the company. Um, you, you know, you have to think about being a manager. Some of y'all might be going into management. That's what you want to do. And you've got to realize, you know, managing people is a very delicate art. Okay. Because you get all kinds of people when it comes to being a manager. Okay. Most companies will structure their organization along departments or divisions. We have an organizational chart here that kind of helps you kind of see everything that's going on. So we have the board of directors. Remember, we're looking at a corporation. The board of directors elects the president, CEO, CFO, things like that. Okay. Then from the president comes down all of the different vice presidents. Okay. There's usually more than one, more than two. This is just a very simple example. Underneath the chief financial officer, we have the controller, we have the treasurer, payroll processing. Okay. When we have chief operating officer, this is the operations all the way down. They have tablet, computer division manager, software development division manager, production manager, and sales manager. Okay. So this is kind of like more of the operations of that. And just for those of you who think that accounting is just sitting in a room crunching numbers, it's actually not. You find people all throughout this process who need to know accounting, and they work directly with these people over here. My husband's job was an inventory control manager, so he was kind of over here, but he reported to the controller, okay? Because the controller is trying to make sure all of the inventory is counted correctly because that is a big number on the balance sheet, and that number needs to be as correct as possible. Is it going to be perfect? Absolutely not, but we hope that it does not have any material mistakes in it. Little mistakes are probably going to happen in any big company, but as long as it is not material. Okay. So I've kind of already talked about some of these in that chart. Didn't realize they had slides for each one of these. Okay. Planning can be strategic planning and operational planning. The strategic is looking at long term. Operational is looking at short term, day-to-day basis. Directing involves the running of day-to-day operations of the business. Controlling is the process of monitoring the day-to-day operations and keeping the company on track. Okay. I believe they actually showed us this same slide way back in chapter one of Principles One, and I kind of like this. This is the first time I've ever seen this. This is kind of how we tend to think about accountants as boring and dry. We black or white issues. It is or it isn't. It's really not like that. It's a jumbled up mess. Okay. This it looks more like accounting right here than anything else. Accountants are very instrumental in helping to create a prosperous society because it all goes back to the theory of resources are limited. We do not have unlimited resources. We don't have unlimited money, so we want to make sure we are efficient when we use those resources. Okay. And that does in turn create a prosperous society for everyone. Okay. Accountants, managers are bound by ethics. Okay. We have the Institute of Management Accountants. They have developed standards. We had standards even way before Sarbanes-Oxley. We had standards then, we have standards now. Okay. We have maintaining the professional competence, preserve confidentiality, and then we want to act with integrity and credibility. So I think they have a slide on a lot of these. Okay. So to resolve any ethical dilemmas, the IMA suggests following the organizational established policies. If those policies do not result in a resolution, then they suggest going to your immediate supervisor, could be an objective advisor, or even an attorney. In some of those cases that we talk about, Enron and WorldCom, those people who were working internal probably got themselves an attorney really fast because they knew there was fraud and they didn't want to go to jail for it looking like it was their fraud. Okay. So competence. Competence is very important. We want to make sure that accountants, like, they are competent, they have the professional expertise to actually perform these functions. And we don't want to just stick somebody in a position just because. We want to make sure they have the right education and different, trainings. When my husband was the inventory control manager, he had a lady working underneath him who went and applied. She applied for an internal job, um, doing something like in accounting. It was moving out of more of the operations, but then they were she was looking at a different job and she interviewed for this job with my husband's boss. And it was so funny because the girl lied so much that the controller was like, there's no way this is true. And so, she knew that a lot of that wasn't true. So the lady told him that she had a psychology degree and an accounting degree, which are so far ends of spectrum. Like you probably, if there's one person out there that has a bachelor's in psychology and accounting, there might only be one. There's very few that's going to have a bachelor's degree. And if she did have a bachelor's degree in either one of those jobs, why was she in the position that she was in? So they asked for her records and she could not produce them. I think she might have produced some kind of fake degree or something, but she was fired in the end because she lied trying to move over to a different department. She also tried to get my husband in trouble quite a bit and like he got in trouble like from some of her lies to begin with, but then when it was all said and done, his boss came back and was like, "I'm so sorry. I shouldn't have believed her lies," because you could definitely see it after that. So you want to hire people who are competent, and that's what the controller was doing in that interview, was trying to assess her skills. And if she did have those degrees, why was she coming from like a very different role that she had been hired for? So it is very important for things to be confidential. Okay. Confidentiality is very important when it comes to anything in accounting. Now, some things are public record, like, sometimes my husband will tell me things about Frito-Lay that are we will talk about them mainly because they're already public record. Okay. But you have to be very mindful and confidential of the jobs that you do. Okay. My daughter's a tax accountant. She can't tell me a lot of things, which is perfectly fine because I really don't want to know it because I've learned there's pain in knowledge. Which is perfectly fine. But when I was still in college, I moved from the bookkeeper role, not the bookkeeper role, the front desk role at the hotel I worked at, over to the bookkeeping role. And I actually had another office doing books more than just the hotel. I worked on books for the other companies that the owner of the hotel had. So I could not believe my manager like had the nerve to sit me down and say, "Now, you got to be really careful. You can't be talking about what's going on over there with people working here." And I was like, "I'm surprised you're even asking me that. Like, I know this. I know that everything has to be confidential." Like, I had no thoughts whatsoever about divulging all that information. I was far enough in my degree, I knew that I had to have confidentiality. Plus, you want to have integrity. Okay. Integrity is very important. Integrity is the one thing that it does not matter. You want to make sure that everybody thinks you are an honest and ethical person. And that is where I got into a couple of situations at that job where I was I had access to a credit card number and somebody had stole that number and they said, "Well, you must have been the one who stole it." And I was like, "Absolutely not. I will come bring you my receipt for the item that I bought and I'll show you the receipt and I'll show you that it was not that credit card number. It was my credit card number." Okay. So So integrity was very important to me. And like, I did not even like the assumption or even the joke that that might have been me because I wanted everybody to know that I have integrity. I'm not stealing anything. You can trust me. Plus, I'd worked there since I was 19 years old. So it was just kind of like, why are you even like, you've known me for so long. You, I mean, like, I worked there for 9 years and I was just like, I can't even believe you joked about that. But it was not a joking matter to me because I wanted to make sure that my integrity was intact. Okay. All right. Then credibility. You want to have credibility in communicating information fairly and objectively. Kind of goes along with your integrity, but when you say something and you put your name on it, you want people to say, "Hey, that's a credible firm. That's credible accountant right there." Okay. If and that is like the bedrock of accounting. Like even when you go to take the CPA exam, they say things like, "Has your integrity ever been questioned?" Like that, you know, I guess technically I could have said yes, but it never was formalized. So of course I checked the box no when I did that. But you want everybody to think that's a very honest, credible person. They've done their due diligence at looking at the financial statements, so there is credibility with them. Okay. All right. There's just a little example on ethics, and I'm going to jump on past that and get to learning objective 1.2. Okay. I've kind of talked about how are costs classified between service companies, merchandising companies, and manufacturing companies. Okay. We've done these two. Okay. They're real easy. When it comes to manufacturing, now we have a lot of different things. Okay. Because if you think about it, manufacturing business taking raw materials, labor, and some equipment, maybe some robotic equipment, and they are turning those raw materials into a finished product. Okay. So within a manufacturing company, they have three types of inventory accounts. And I actually have this started over here. I wanted to I have this that I made up, but I don't want to show you all of that yet. I want you to watch me as we go through some of this, okay? So if you think about raw materials, think about Frito-Lay. That's like the corn or potatoes, the raw materials going into it, okay? Think about the work in process as your assembly line. And then think about once it leaves the assembly line, it's a finished good and it's ready to be sold. It'll sit in finished goods. Finished goods acts very similar to merchandise inventory in a merchandising business, okay? Because when it leaves finished goods, it will turn into cost of goods sold. Let's see, make my tip just a little bit bigger there. Okay, so I'm gonna put that up there. So it is similar to merchandise inventory. These are all three asset accounts, okay? Merchandising business, we had one asset and that's it when it came down to inventory. Manufacturing is going to have three, okay? So all of these are going to have a beginning debit balance. Something's wrong if they tell you it was a credit balance. That's almost never going to happen unless it's an error, okay? I'm going to draw a little total line down there and we will have an ending balance in each one of those. Okay. So that's all I want to do right now on that one. We have stuff that's going to move in and out, but I kind of want to just show you those three T accounts. Those are all assets. Okay. So now we're going to kind of talk about direct and indirect cost. Okay. A direct cost, you can easily identify it to that object. You open up a bag of Lay's potato chips, you can see there was a potato at one point. There was a potato that made that chip. Okay. That's a direct cost. Okay. Things that you might not see so much when you open up that bag of potato chips could be maybe the oil that it was fried in, kind of indirect, although that might be a direct that could be questionable. An indirect cost could be the bag that is put in that the chips are put into. Okay. So I like that they put this, don't confuse prices with cost. Price is what we would go to the store and buy that bag of chips for, but that's not the cost of that bag of chips because obviously Frito-Lay is in it to make money. Okay, they're going to stop making chips. If they're not making money, they're going to stop making chips. They're going to find something else to do to make money. Okay, so we're talking about the cost. So don't get confused with the sale and the cost. Okay, we have three different manufacturing costs, okay? And I'm going to go back over to my T accounts and I'm going to fill them in where they go for the time being, okay? We have direct materials. Direct materials we can see. We've kind of talked about that. Direct labor. These are the employees working on that assembly line. Okay. And when you're making something like chips or some of these things, there's not a lot of direct labor because there's a lot of robotics going into it, automation going into it, and a lot of that will end up in manufacturing overhead. Okay. So direct labor would be anybody working on the line, okay, on that line, moving the raw materials over to work in process, putting it in there, things like that are going to be direct labor, okay? There is a whole lot of things that go into manufacturing overhead. It's really everything else. If it's not direct labor and it's not direct materials, it is manufacturing overhead. Okay. And you will hear different businesses say the overhead's killing us. Yes, it is, because usually there is a lot of overhead. Okay. One of the indirect labor, that could be the janitor. So let's just say it's the janitor sweeping up something that's fallen on the floor. Okay. It goes into the manufacturing process, but it's an indirect labor. Okay. A manager, a manager of those direct labor employees. Okay. Manager, things like that. An indirect material, I kind of mentioned that could be the bag that the chips go into. All the factory costs, rent, utilities, and insurance, all of those for the factory will go into the manufacturing overhead. So I'm going to jump over here and fill those numbers in to where they go. Okay, let me get a different color. Okay, we have direct materials, direct labor, and manufacturing overhead goes into work in process. Okay. Direct labor is going to come, not sorry, direct materials will come from the raw materials. So what leaves raw materials goes into work in process. Okay. I'm going to fill this one in. So we'll have all of the raw materials things in. Any new, I'm going to do new raw materials purchases. Okay. We buy another truckload of potatoes, it goes into the raw materials. It doesn't go into the work in process until it hits that assembly line. Okay. So we're looking at physical flow, but we're also looking at the dollar flow to kind of match that physical flow so we can have better information. Okay. So let's jump back over here. Okay. And so we have those three manufacturing costs. We have the direct materials right there, direct labor, and then indirect cost or manufacturing overhead. Okay. So if you look at your three costs here, you can look at direct materials, direct labor, kind of, if you kind of think about the term direct and prime kind of sound similar. Okay. Direct materials, direct labor are a prime cost. Direct labor and manufacturing overhead are conversion cost. Okay, so direct labor fits into both of those. It is a prime cost and a conversion cost. Okay, what we've talked about up to this point is all product cost. Period cost are everything that's not a product cost. Okay, the accountant's salary, administrative expenses, the utilities on the office building is a period cost. Utilities on the factory is going to go into a product cost. Okay. So period are non-manufacturing costs. They don't go into making the product. Okay. Selling. You may have a salesman selling those products. Okay. So those are all period cost. Okay. So here they give us a really good diagram of the difference between period cost and product cost. You don't have to memorize anything special because you've already memorized what are the three manufacturing costs. There, those are right there. Everything else is going to be a period cost, and they are expense when they're incurred. Notice on my little diagram over here, we're going to have raw materials. It's going to flow to work in process, and then it's going to flow to finished goods. When it leaves finished goods, I'm going to go ahead and write here, it leaves finished goods as cost of goods sold. Okay. So we're sort of accumulating all these costs as we go through the assembly line process. Okay. Whereas the salary for the salesman, the utilities for the office building, all of those are going to go straight to the income statement. Okay. So here's a really good problem with dissecting period versus product cost. Okay. I probably going to have a homework problem that'll look very similar to that. Okay. We are going to stop there. We did objective 1.1 and 1.2. We'll do 3, 4, and 5 in the next video.